Hi everybody, this is Lara from Pure Elliott Wave. I'm going to update Ethereum with you today. I haven't done that since January. And just as the intro was outlining, before I jump into this, I'm launching my next online course, hopefully this Thursday. If you want to get notified of a special launch offer, click on the link below in the description box below this video on the YouTube channel. There will be a list you can sign up, and I will email you and tell you of that special launch offer when it launches on Thursday. Hopefully Thursday, but I mean, we could possibly be derailed in our plans and it might not be Thursday. So if you want to know about that, get notified. Okay, let's jump into Ethereum. It's been a while since I updated this. This is one I purchased back in 2019, so I keep a pretty close eye on it. Elliott Wave first, classic analysis at the end of this video. This is the full price history of Ethereum. I'm using crypto compare data, and it's got this weird, I don't know what this is, I don't know what it's doing. I might download some Yahoo Finance data and replace this. I find crypto compare data sometimes has some odd little things that look really wrong. And so I think Yahoo Finance is a bit more reliable. So I am aware of that because I'm pointing it out because someone's going to tell me about it. Okay, from the inception of Ethereum, from this low to this high, I see a really good 5-wave impulse. I'm labeling this cycle wave 1, it's lasted a few years, and then cycle wave 2, a deep 94% correction followed. It doesn't look that deep because of the scale. This is a semi-log scale, and because of the extreme volatility of this market, like pretty much all cryptocurrencies, it has to be viewed on a semi-log scale, and the corrections are very, very deep. That's really normal. So following a 5 up, there's a 3 down, we're expecting another 5 up. That's the basic Elliott wave pattern. 5 steps forward, 3 steps back. Cycle wave 3 may only subdivide as an impulse. It can't be over here because this can't be cycle 4 because it's overlapped wave 1 price territory. And so cycle 3 must be incomplete, and only primary waves 1 and likely 2 are complete. I have an alternate on the weekly chart which allows for primary 2 to continue lower. If it does, it may not move beyond the start of 1 below 82.05. This is a best fit channel around this bull market, from this high to the all-time high, with a parallel copy on the end of this bear market. If primary 2 does continue a lot lower, then I would expect it to find really strong support at that trend line, but I don't think it's going to get down that far. If it's over here, it's an 83% correction of primary wave 1, well within the common range for cryptocurrency bear markets. They range from about 75 or so to 80, 90, or even above 90%. They do tend to be very, very deep, a lot deeper than the 0.618 Fibonacci ratio. Let's take a look at my first weekly chart. From this high up here, the end of primary 1, this high up here, if primary wave 2 is over here, it subdivides very well as a double zigzag, W, X, Y. If primary 2 is over here, then primary 3 should have begun. A potential target for primary 3 is for it to reach 11.09 times the length of primary 1. That would see it end at 54.226. This is an extreme Fibonacci ratio, but these cryptocurrencies do tend to have extreme relationships between their first and third waves, so that fits for this kind of market to use such an extreme Fibonacci ratio. Primary 3 may only subdivide as an impulse. Within it, intermediate wave 1 must subdivide as a 5-wave motive structure. If my labeling of minor 1 here is correct as a 5-wave impulse, then intermediate 1 is most likely unfolding as an impulse, and that's the most common structure for a third wave. So within the impulse, 1 and 2 may be complete, 3 in its early stages, with 1 complete here, and another pullback for 2 may move lower over the next few weeks. It may not move beyond the start of 1 below 1074.40. I've drawn this best fit channel really carefully. I've drawn it from this high, not the all-time high, but this high to this high, extended it on out, and it's almost touched for the last few weeks upward movement. From this low to this high, this upward movement looks really good as a 5-wave impulse. So with a 5 up, we should be seeing a 3 down, which may not move beyond the start of the 5 up. One of the simplest, most basic Elliott wave concepts. Let's take a look at how this may be unfolding on the daily chart, where this low here for minor 2 is this point down here. I've got quite a lot of detail here within minute wave 1. As you can see, it subdivides as a beautiful looking 5-wave impulse. If this is correct, then the new trend should be up and this downward movement, a following second wave correction, should be a counter trend movement. Minute 2 may not move beyond the start of 1. This chart is on a semi-log scale, and so the Fibonacci retracements have a logarithmic function applied to them. My target for minute wave 2 is the logarithmic function of the 0.618 Fibonacci ratio at 1291.97. After that, a new high above 2030.19 would invalidate the alternate wave count and add a lot of confidence to this main wave count, but I'll have substantial confidence if we see this trend channel breached. This channel contains all of the bear market and has provided resistance multiple times, so it has reasonably good technical significance. I define a breach quite conservatively: a full daily candlestick, a green candlestick of upward movement above and not touching this trend line. That would constitute a solid breach, and then I would have a lot of confidence in a bull market for Ethereum. On the weekly chart, it's all the same to this point here for both my wave counts, and now I'm considering, what if primary 2 was not over here? What if it's continuing lower? Can it subdivide as a double zigzag? The subdivisions here will fit, but it doesn't look as good as the main Elliott wave count, so that reduces this probability of this alternate. Also, there's a lot of technical support for the view that this low is likely to be sustained for the long term, and so this alternate wave count does not have as much support from technicals as my main Elliott wave count. I rely really heavily on technical analysis to guide my Elliott wave counts. But I always like to have an alternate. It's important to consider what if, and particularly while this bear market channel is providing resistance, we do have to consider the possibility that the bear market may not be over. I would not want to be as arrogant as assume that I'm absolutely right and that this low is going to be sustained and we're on the way up for an early stage of a third wave. I could be wrong, and before it'll happen again. Okay, so what if primary 2 is continuing lower? This wave count has a lower probability because the subdivisions here don't fit as well, and it doesn't have as much support from technical analysis. If it's continuing lower, this double zigzag has the first zigzag over here. The double is joined by a 3 in the opposite direction labelled X, and now the second zigzag, A, B, C, moving lower. For this wave count, I have a target for C for you. If the main wave count is invalidated with a new low below this point, 1070, I think that was, then this would be my target for support at 397. Minor wave C would reach 1.618, the length of minor wave A, and primary 2 may not move beyond the start of primary 1 below 82.05. To the upside, if minor B continued any higher, it may not move beyond the start of A for a zigzag above 2030.19, and that's why a new high above this price point would add so much confidence to the main Elliott wave count. But before we got that, we would have a breach of this trend channel. Let's take a look now at the daily chart. This low down here, the end of minute B within minor B, is this point down here. Here's the end of minor wave B, so minor wave B an expanded flat, and now minor wave C within the zigzag of intermediate Y must subdivide as a 5-wave motive structure. Within it, minute 2 may not move beyond the start of 1 above 1741.06. On the weekly chart, price is constrained with resistance about 1750, support about 1070, ADX is declining, there's no clear trend, on-balance volume is also constrained. Price reached support here about 1070, stochastics reached oversold, stochastics moves higher, while price reaches resistance. Price now turning down from resistance. Expect price to continue lower using this model until stochastics gets close to or at oversold, and price again reaches support. First support 1295. If price reaches that support and stochastics is oversold, it may end there. If price reaches first support and stochastics is still neutral, look out for next support about 1070. Volume is declining as price moved higher up to resistance and is continuing to decline as price moves lower from resistance. Pretty typical behaviour from volume during a consolidation. RSI money flow both neutral, we've been over ADX and stochastics. ATR continuing to decline as price moves sideways as normal behaviour for a consolidation. On the daily chart, we can see the end of the upward swing within that larger consolidation at this high here. ADX here tells us the upward trend is very extreme, and then RSI reaches overbought and then exhibits doubled bearish divergence with price. Given an extreme upward trend, RSI overbought, double bearish divergence, and the existence of a couple of bearish candlestick patterns, it looks like we're probably going to see a continuation of downward movement from here. That's an absolutely reasonable expectation, and the Elliott wave count has such a really good looking 5-wave structure over up here, so let's expect more downward movement. Next support 1360 to 1400. Volume really light. Was supporting upward movement here, but now declining as price is moving lower. On balance, volume's got a pretty tight range here. A breakout of this range would provide a signal. There's no signal as yet, but the signal would be weak because these trend lines have a fairly decent slope. ADX is declining at both time frames. That is telling us there is no clear trend. RSI now neutral, money flow neutral, a ways to go before they reach oversold. Stochastics reaching oversold at the daily chart level. We could see a bounce about here. We could also see stochastics remain oversold for a little bit longer before price reaches support. It's not always that great at timing. The moving average situation is bullish, and there was a golden cross back here. I should have noted that on the chart, with a 50-day moving average crossing above the 200-day. The 200-day now has a negative slope, 50-day positive. This is a bit of a mixed look, but on balance, it's more bullish than bearish, which would support the larger view for the Elliott wave count. That's it for me with some Ethereum update for you. I still got another couple of markets. I think Polkadot and Cardano coming up next to work through my list of what you voted for. And please also don't forget to sign up to get notified of that launch offer of my next course, Buy Low, Sell High. And thank you so much for your support as always. I really appreciate you.